Thank you everyone for giving those ones. Now I can tell that everything is clearly out there and everybody can hear me. Okay, so why today's Zoom call? Personally, I've been learning new stuff nearly almost every day. And I came across this, I learned this, and I've been practicing it in the market. I actually took a trade with it today. And I think that would be the first thing that I'm going to show you everybody before I actually go on to the teaching power of it and making people understand why I took that trade. Are you sharing your screen? Yes, I am sharing my screen. Can you not? Give me a 2 in the box if you can see my screen, guys. Yes. See now. Thank you. Thank you. If I was dreaming. But yeah, just like I was saying, I took this trade this morning. I nearly missed it, but yeah, I didn't miss it in the end. I got in, and I'm very happy that I got in. Where is it? Euro AUD. I think that was where I saw it this morning. And that was the trade right there. The issue with M's and W's, why is it that? I'm just going to ask a quick question. If you can give me a clear answer, feel free to unmute yourself and tell me about it. After that, please mute yourself back on. I want to make it as educational as possible, but interactive as well. Why is it that every time you go on Google and then you type in how to trade, the pictures you're going to be seeing is usually M's and W's, channels, wedges? Come on. Any more examples? Any more examples? These are the kind of things that you're going to see. And sometimes it's so fascinating that why are we always seeing this on Google? Everybody, flags, reversal candle patterns, everybody is telling us that, but most people in trading are struggling to actually make profit. Most people are still not finding it so easy to make profit. Guys, is there something wrong with what they're telling us on the internet, or we are not trading it the right way? I'm going to leave 2 minutes. I just want to hear everybody's comment. What everybody think about this.
Hey, Francis. So I basically, hey, everybody. So I think it's basically showing momentum in the market. And I think it's something that we're missing. And that M is a money M.
Yeah.
Yeah, that's my take on it. Anybody else?
Anybody else has got any understanding as to why we are always seeing M's and W's in the market on Google when you want to learn how to trade? Look at that. I just typed it and look, that's all I'm seeing right here. How to trade M's and W's. They actually have a strategy called how to trade M's and W's, guys. On Google, we've been taught to trade for the SM to collect our money. We are the liquidity. Of course, we are the liquidity. Thank you, Soban. Phil, thank you so much. They are telling us to trade the way that will give them the potential to take our money. Place there on purpose. Thank you, Lee. Anybody else, feel free to share your idea. I want to make it as interactive as possible before I go to the educational side. It's a lie, Clive. It is a lie. And that is what they tell us. That is what they tell us. That is how they want us to trade. Then we keep on losing and we struggle to understand why we are losing. And sometimes I just don't get it. I believe everybody here can share my frustration as to why we're being told to trade in a certain way, but then every time you're trying it, you're starting to lose it. All right, I'm going to show the first example as to why I'm so venting about this right now. I feel same with trading view, trading ideas. They must be placed to trick people. All right, let's dive into it. We're going to go to the education side of it. 96% because laws due to this. Yes, people are just losing because of this. I just want us to think about this, guys. You are here to learn. And that is the reason why I'm asking the question that most forex traders are asking themselves today. Why am I trading the way Google is giving me, YouTube is giving me tons of videos on YouTube are going to tell you trade M's and W, trade with EMAs, trade with Bollinger Band and all sort of things, and you still end up still losing. Why am I never in profit? Laura, that's a good question you're asking. Feel free to vent your frustration right here. I want people to feel free in talking about why this is not working for them. Then I'll go back on the chat and show people why this is not working. Feel free to share your frustration, guys. I want to see it. Come out. Tell yourself, why am I losing? Even though I've done every single thing that this Google is telling me, this YouTube channel is telling me, and it's still not working for me. Market manipulation, Lee. Market manipulation. Constantly, they're being manipulated. I'm always winning. I'm never losing. Thank you, iPhone. That is your point. Risk management. Thank you, Zangi Wilson. I lose more than I win. Lara, I do not use Google, just I am. All right, thank you. Thank you for actually telling me it's I am. And because, guys, the information we get from I am is crazy. And people are taking it for granted because you come in, you just want to make money the next day. And if you don't get it, you think I am is not giving you what you want. Guys, you'll be surprised at every single thing that I learned to teach on this call. I learned them from I am. Let me show you right here. I want to show you right here to let you know that I learned it from I am, nowhere else. I've actually made a video pack for myself, only from I am that I want to be watching, and that is all I watch. That is all I watch. I created it just for myself, and continuously every single day I am watching this. Look at this, guys. iMarkets Live TV, Smart Money Concept, every single thing that Smart Money teaches, this is the videos that I watch. And guess what? I try as much as I can to watch at least 1 or 2 videos in a day. I try as much as I can to watch 1 or 2 videos in a day. And this is how I always get information to give out. Murray says, most losses, very little wins, and the losses comes faster compared to the wins. Of course. They are good at taking away our money, but it's very hard for them to actually give us the money that we want from the market. Who can tell me something significant about what I see on my chart right now on Euro AUD? The part that I want people to look at is around this area. Let's change the color. In the chat box, who can tell me what is significant about that area? I see gaps, liquidity. Thank you, Lee. M. Of course, there is an M. Triple top, gaps, imbalances, consolidation. Guys, look at the funny thing. Look at the funny thing that happened right here this morning. I was at work this morning and I was watching this. Let's make it bigger. And I was watching this. Let's change the color to black. It's a deep revelation I'm going to show right now. Wyckoff, thank you, Simone. We've got some students right here who are just advancing in trading like the smart money way. Look at that. And then all of a sudden, price decided to do this. and then it went up. So this is your W right here, double bottom right here. This is your double top right here. And guys, everyone who was trying to trade this got taken out. Everyone who was trying to trade this got taken out. And look what price does. Boom, it went up. Return to order block, BB. Thank you very much. Return to order block. Everybody who was trying to see the M's and W, the flag pattern, the consolidation breakout, and whatever it is, this is the breakout right here. Let's clear everything. See, this is the breakout right here. Potentially, you could be saying that it gave you another retest, showing you that price could potentially even go away. And all of a sudden, it pushed back inside. And look, the direction is to the next side. Why am I talking so much? M's and W's are targets for big banks. If you are here and you're taking notes, I want you to write this as big as possible. M's and W's are targets for big banks. It's not an opportunity for us to make money. I know it sounds a bit confusing because most of us, we have traded M's and W's for almost a year, for almost 2 years, and that is what they're telling us to do. And that is all our brain knows. If you see an M, wait for the second part to form and then take your trade. Sell it. If you see a W, wait for the second part to form and then buy it. That's all we've been told. But today, I am on this call trying to tell you that whenever you see an M, whenever you see a W, whenever you see a triple top, quadruple top, whatever it is, it's just not an opportunity for you to sell or buy. It's instead a target for you to watch for an opportunity. Don't trade it. Don't trade it, Simone. Thank you very much. All right, so I'm just going to use the example that I saw right here. It was a 15 minutes time frame trade that I took, and I'm going to go over it and show people exactly why I took this trade. I was actually frustrated. I think I shared it. I was actually frustrated because the first time that I tried to enter the trade, they did not allow me. They just increased the spread that my trade did not get triggered. So I actually had to do a market execution. Where is it? I hope everybody can see my screen. That was Euro AUD this morning. I hope everybody can see my screen. Give me a 2 in the box if you can see it. Right, so I had the buy limit set and everything. Look at the way the wick came in, intentionally increased the spread, and my trade didn't get triggered. It's so annoying. It is annoying. It is so frustrating. So I had to do market execution, and it's the exact shape that I'm showing you here right now, guys. Look, a W. What do? You buy here. That's what we are told. Instead, they didn't do that. They didn't do that. Instead, they decided to go up a little, and then they came down stronger to take out the stop losses for anybody who saw that W as an opportunity. And look, they left. Swept liquidity, swept liquidity. If you're on this call and you don't know what liquidity is, give me a 1 in the chat box. Where did you get in? All right, so I got in here. I got in at this wick right here. And everybody who has been following my videos for a while knows exactly why I got in on this candlestick right here. Let's zoom in for people to actually see exactly what I'm talking about. This is the candle that I was looking at. So I got in right here at this candle. with maybe 2 or 3 pip stop loss, and that's it. Please tell me how you knew to get in there. All right. How did I know to get in there? That is exactly the question that I want. Welcome to the world of Forex. Cheers, Francis. All right. So Lara, the reason why I got in there is the reason why I'm on this call today. I want everyone to pay attention to exactly what I'm going to talk about. I've taught people about institutional candlesticks. I've taught people about imbalances. I've taught people about liquidity. Today, I'm taking it a little bit further. Everything that we have learned, we're going to put them together. And then we are going to see why I took that very trade there. Everybody in the Harmonic Book group, I remember sharing this with you. And then I told you guys, anybody looking at EA, and I remember how I had some few people telling me they're looking to buy EA, and that's it. That was the perfect move right there. So guys, I was looking at this. The reason why I got into this trade, let me stop talking too much. The reason why I got into this trade is I realized that price was coming down. And one funny thing about this trade right here, who can tell me what this candlestick is? Let's put an arrow right there. Who can tell me what this candlestick is in the group chat? Clyde say an institutional candlestick. Anybody else? All right, everybody saying institutional and institutional. Okay, no, I am going to differ on this one. And guys, why am I going to differ? Look at where the candlestick got formed. Look at where the candlestick got formed. And tell me the secret about this. Look at where the candlestick got formed. What is this? And tell me what is special about that candlestick. A breaker block. Thank you, Bibi. Is a breaker block. The reason why it's a breaker block or a mitigation candlestick is because it was formed right above liquidity, right below liquidity. Don't even know what that is, Lee. All right, take it easy, Lee. I am going to explain why it is a breaker or a mitigation candlestick. The last blue candlestick before the down move is an institutional candlestick. However, when an institutional candlestick gets violated, it becomes a breaker block or a mitigation candlestick. If that was clear, give me a 1. If it's not, give me a 2. All right, so some 2s and some 1s. I am going to go over it again. I'm going to make sure that everybody gets value on this call. So for every institutional candlestick, if it gets violated, it becomes a breaker block or a mitigation candle. I am going to repeat it one more time. A violated institutional candlestick becomes a breaker block or I like the answers coming in right here. I like the comment. I like the statement coming through the chat box. So for an institutional candlestick to be violated, automatically it is an opportunity for you to take a trade on the other side of it. That's what I'm trying to say. Violated means next one bigger. All right, let me show you about that, Laura. Take it easy. What do you mean by violated? Okay, so this is the last blue candlestick, guys. Let's zoom in. Let's focus on this area, guys. This is the last blue candlestick before this down move, right? And this is a break of market structure right here. We broke the structure. You can tell this is a high, a low, a lower high, a lower low, which means we came below this candlestick, making this area an institutional candlestick. Potentially, everywhere here, I was supposed to sell. Because of this break of market structure and because of the imbalance and the institutional candlestick, is a perfect scenario for me to sell. However, price went straight through it, took out the liquidity and went even higher. It becomes a breaker block or a mitigation candle, Joyce. A breaker block or mitigation candle. So just like I was saying, the last blue candlestick was an opportunity for me to sell. Instead, price went straight through it for the liquidity. Come again. All right. Let's go again, guys. I have a high right here. A high. Let's label it, make it clearer for people to understand. A high. I'm going to represent it with a H. High. A low. A lower high. And a lower low. So this area is the high, a low, a lower high, a lower low. In market structure, what would you say this is? A downtrend, right? We would call this a downtrend. Why? Because the trend is coming down. So for all those people that trade trend lines, I'm showing you an example why smart money gives you those trend lines. A high, a lower high, a lower low right there, guys. And look, because of this break of market structure, if I trade institutionally, guys, then I am going to know that this last blue candlestick with an imbalance right in front of it, I would be looking to sell right here. This would be my setup right here. Sell. This would be my setup. Sell right there with my stop loss here. And I'll be looking to target the next imbalance, which is around this area for my TP. However, look what happened, guys. Price went straight through my stop loss. And that candlestick that I was targeting for my entry automatically becomes my mitigation candle or a breaker block. If that is clear, give me a 2 in the chat box, guys. If that makes sense. And guys, because you got taken out, somebody's saying 1. Joyce, what is the 1 about? I was asking for 2. Lee say bastards. All right. I am going to go through it again.
I didn't understand, sorry.
I'm going to go through it again. So, an institutional candlestick is the last red candlestick before an up move or the last blue candlestick before the down move. In this case, this was the last blue candlestick before the down move. This blue candlestick right here before the down move. So my entry is supposed to be inside this country. I am targeting this candlestick because I think this is where smart money came in the game. And look at it, guys. It is exactly what it is. They came in it. Look at how big that candlestick was. For smart money to move candlestick a pip in a market, they need over $1 billion to move price a pip in the market, guys. If you didn't know about it, I am telling you. You need over $1 billion to move price more than a pip. So your money, your 10 pounds, your 5 pounds, your 6 pounds is got nothing to do with the market. It don't care about you. The market does not care. It don't move the market in any way. Hence why where you decide price should go is not the right way, unless price wants to do whatever it wants to do. Take note of this. Where you decide for price to go does not matter. Price will do whatever it wants to do. At the end of the day, the market is right. Write this down, guys. Where you decide or where your bias tells you price will go does not matter. We are relying on the dynamic traders, McDouglas. Of course we are. You see, It don't matter. The market will still do whatever it wants to do at the end of the day, and it's right. If you manage to get in at the right position, well done to you. But if you're on the wrong side, my brother, my sister, man, your money is just gone out of the blue. It's just gone. Give me a 1 if you're getting some value right here, guys. I'll come back to the lesson. I see Jessica right there. A real big trader, Jessica. I see you. I'm so blown away right now, guys. Look, my institutional candlestick got violated. I am out of the trade. I've hit stop loss. But look at what the market did. I am going to extend this line right here. This line that I had right here as my entry, I am going to extend it to the other side, and I'm going to show you what happened. This is the candlestick I'm looking at, right? That's the candlestick I'm looking at. And look what price did. We came right there into that same area. Let's put the line right here above that candlestick, and you see how shocking it is. Look at that, guys. Let's change the color. Make a purple. So that candlestick that we were looking at, this area for our entry, they broke out of it, and look what they did now. Came back to that same candlestick and price went up. Feel free to let me know how you feel about this right now, guys, in the chat box. It's like a fake upon fake upon fake upon fakely. It is. Or somebody says confused. But yeah, that candlestick we were looking at, we were talking about in this area. This institutional candlestick right here, right? I was looking to sell it right there. They took my stop loss. Why? Because there was liquidity equal high in this area. And look, on the left-hand side, that same candlestick, look at the way they came back in. Where are the T-cap traders? Where are the T-cap traders? So the signals you've been taking in the AFA house, this is how some of them come about.
You will hurt yourself, Kyla. You cannot climb up there on your own, okay?
So some of these signals that we are taking, this is how they come about. What is this? A teacup and a handle. You're dead. Don't be dead yet. Don't be dead yet. This is just the beginning, guys. I'm just looking at the market just like everybody else sees it. But now I am telling you the indicators don't matter. All you need to know is understand why they are creating this information, why they are creating these candlesticks. The RSI is good. I'm not saying stop using it. I'm not saying stop using the stochastic and all that, but guys, look at this. I have no indicator right here. I just placed a line at the exact place that I got taken out of the trade. I got hits. I got my stop loss hit. And look at that. After 5 days, after 4 days and 21 hours, that same area gave me another opportunity to make profit. After 5 days, that same area that made me a stop loss, that took away my money, that same area gave me profit. And let's look at how much profit I made off there. 100 pips. Let's compare it to the stop loss that I got hit right here. I was looking to enter right here, and my stop loss was here. 7 pips stop loss. So I hit stop loss for 7 pips, and today I got 100 pip. Francis, how do you know when to exit the trade? All right, I'm still in the trade, guys. I'm still in this trade because my target area is around this area. Why am I targeting this area? Anybody in the chat box? Why am I targeting this area? Historic high, thank you. An imbalance, thank you. A double top, thank you. You see, people are grasping the concept right here. If you're here and you're not learning, guys, please, 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 go back and learn. I am begging you, go back and learn. Trading can be easy. That's the area that I'm targeting for EA to reach. And everything that we've talked about, the imbalances, the institutional candlestick around that area right here, a historic high, that gives me the confidence to hold my trade. Even when it's starting to come down, I'm not scared. Why? Because I understand that this is an imbalance right here. Potentially, this could even give me a re-entry. Imbalance, imbalance. If you go on an hourly, look at that. Look at what just happened. Look at that candlestick that gave me the profit. One candlestick, 100 pip profit. If you get the trade at the right area, guys, it don't have to take you too long to make the profit. Do you do analysis on the 15 minutes time frame? Okay, so I do my analysis based on higher time frame, and then I scale it down to smaller time frame. Okay, so why would I say based on higher time frame analysis? On a higher time frame, I'm looking for imbalances, I'm looking for institutional candlesticks, and I'm looking for liquidity. Liquidity equals where the money is in the market. Once I have identified everything, I scale my entry down to reduce my risk. Reduce my risk. The trade that I was talking about is right here. We have not come back to that yet. I have just a minute on this call, guys. I want everybody to drop off this call and jump back on in the next minute. If you're really happy with what you're seeing right here, give me some fire emojis while you're leaving. I just want to see you come back and learn some more values right here. Just a minute, guys, just a minute. Jump off and jump back on and see what this market is doing to us. Let's go, let's go, let's go, guys.